Hi, I'm Tony Carrion. If you've been following the cryptocurrency headlines lately, then you know Bitcoin reached its highest levels since January 2018. From October 1st to November 6th, it advanced more than 39%. That new high put it within 24% of its all-time high for the first time in nearly 3 years. But going back to earlier in the year, specifically mid-March, the possibility of such an advance was on virtually nobody's radar screen. As the wave labels in this weekly chart from January 2020 suggest, we were modeling a further advance for Bitcoin within a primary Wave 5 bull market, with Wave 4 having ended in December 2018. Bitcoin rallied to a high of 13,844 into June 2019, an intermediate Wave 1 of that bull market, before lapsing into a Wave 2 correction. Now honestly, that Wave 2 went on longer and deeper than we had anticipated, retracing 86% of the Wave 1 advance. Given the depth of that retracement, we had to consider an alternate scenario that allowed Bitcoin's bear market that began in December 2017 might not have ended. Indeed, the lows of March 13th were pivotal in the cryptocurrencies, in that other cryptos, like Cardano for instance, had fallen to new bear market lows. Now, one of the cardinal rules of Elliott wave analysis is that Wave 2 can never retrace more than 100% of Wave 1. In other words, we would only have adopted the alternate bearish scenario if Bitcoin had violated its December 2018 low. By April, we were starting to see impulsive price action that was favorable to our 1, 2, 3 scenario, and we left that alternate bearish scenario on the side. Instead, we were focused on the internal waves of what we were considering an emerging Wave 3 rally in its very early stages. One of the objectives we wanted to see Bitcoin accomplish to bolster that scenario was a break above the Wave B high on February 14th. Achieving that objective would be the first step towards the even bigger goal of retesting and exceeding the June 2019 high. Now, as this chart from July shows, Bitcoin nearly broke through the Wave B high, but fell just a little bit short. However, we could count an impulsive pattern up from the March low that we counted as Wave 1, and were allowing for a pullback in Wave 2. After about a month, Bitcoin broke through the February 14th high, which was encouraging for our outlook, as it put it in range of the June 2019 high. But naturally, it wasn't going to go up in a straight line. Zooming in on this part of the pattern, we had to let the subdivisions of that developing advance unfold, as all wave patterns are formed by smaller degree wave patterns. But even so, Bitcoin's uptrend from March remained intact. Then on October 29th, Bitcoin reached an intraday peak of 13,851. Although it wasn't by much, it was still Bitcoin's best high in 14 months. But it didn't end there. By November 6th, Bitcoin reached an intraday high of 15,945, reaching nearly 3-year highs. Subscribers to our cryptocurrency service will be kept abreast of when we think that moment will arrive. Thank you for watching.